Have you ever looked at one of those dense financial reports, just packed with numbers and charts, and thought, what on earth is this actually trying to tell me? Well, today, that's exactly what we're going to do. We're going to pull one apart, piece by piece. Let's dive into this technical analysis on gold and figure out the story it's telling.
So here it is. This is our starting point. The price of gold as of November 26, 2025. This is the what. But, you know, a number all by itself, it's pretty meaningless, right? It's just a fact without a story.
So that's the real question, isn't it? How does an analyst take this one number and turn it into a full-blown investment thesis? That's what we're here to figure out. We're going to retrace their steps, starting from their final conclusion and working our way back to see how they got there.
Now, one of the cool things about this report is that it doesn't make you wait. It gives you the big conclusion right at the beginning. It's the bottom line, right up front, so we know exactly where their analysis is headed from the get-go. And here is that bottom line. After crunching nearly 100 different indicators, the report spits out this number, a metal technical score of 58.7. So what does that actually mean? In simple terms, it's a moderately bullish signal. The outlook is positive. Now, the fun part. Let's figure out how they got that score. Okay, so the very first thing any analyst needs to figure out is the most basic question of all. Which way is the wind blowing? Forget all the little daily ups and downs. We need to know the big picture direction. Is the price generally moving up, or is it headed down?
To see that big picture, they use a tool called a moving average, and it's simpler than it sounds. Think of it like this. If the daily price chart is a really bumpy, winding road, the moving average is like paving it over. It smooths out all that noise, all those potholes, so you can see the real direction of the road much more clearly.
And this is where it gets really interesting. The report looks at two of these paved roads. The short-term 50-day average shows where prices have been recently. That's over $4,000. But the long-term 200-day road shows the bigger picture, and that's way down at $34.65. That gap between them is huge. It tells us that the recent momentum, the recent sentiment, is way, way stronger than the long-term baseline. And that big gap leads us to a key concept in technical analysis. When that faster short-term average crosses above the slower long-term one, traders call it a golden cross. It's a classic, textbook bullish signal, and the report flags it loud and clear. The trend is officially positive.
Okay, so we know the direction is up. We're heading uphill. But that's only half the story. The next big question is, how much gas is in the tank? Is there real power pushing this price up, or is it just kind of coasting and about to run out of steam? This is where we measure momentum.
And for that job, analysts have another key tool, the Relative Strength Index, or RSI. If the moving average is our map showing us the direction of the road, you can think of the RSI as our speedometer. It tells us not just that we're moving forward, but how fast we're accelerating. So what's our speedometer say? It's reading 61.4. And as you can see, that puts us right in the strong end of that neutral zone. This is actually a great spot to be. It shows there's solid, healthy power behind the move, but we're not in the overbought danger zone yet, which could signal things are getting overheated. And it's not just one indicator saying this. The report looks at a couple of other momentum gauges, and they're all telling the same story. You don't need to be an expert on the MACD or the Arun oscillator. The key takeaway is simple. Multiple different tools are all pointing in the exact same direction. They're all confirming the trend has strength.
So let's recap. The trend is up. The momentum behind it is strong. For the final piece of the puzzle, we just need to add a little perspective. Where does today's price, almost $4,200, where does that actually sit in the grand scheme of things?
This timeline just makes it crystal clear. Over the past year, gold hit a low of around $2,600. The highest it got was just under $4,400. And today's price, well, you can see it's way, way closer to that one-year high than it is to the low. That tells you it's been a pretty powerful climb. And here's another way to think about that. The report crunched the numbers and found that today's price is in the 88th percentile of its one-year range. To put it another way, for about 88% of the last year, gold was cheaper than it is right now. It's trading in the top 12% of its range, another really strong signal. All right, let's bring it all home. We've looked at the trend, we've checked the momentum, and we've put the current price in its historical context. Now we can see exactly how the report takes all those pieces and builds its final verdict. And this is what is so compelling. The story is just incredibly consistent. You look at the trend analysis, It's bullish. You look at the momentum indicators, they're bullish. You look at the price's position, you guessed it, bullish. There are no mixed signals here. Everything is pointing in the same direction. And that, right there, is how we get back to that initial score of 58.7. See? It's not some random number they pulled out of thin air. It's the logical result of a clear, consistent, and unified story being told by all the different layers of data. The final verdict is strong and unambiguous.
So what this entire analysis gives us is this incredibly clear snapshot of a single moment in time, a trend that is strong, well-supported, and pushing the upper limits of its recent range. But the one question a report like this can never answer, the one at least for us to wrestle with, is what happens next? Is this the peak, or is this just the beginning of the next big climb?